All right. Good morning, everyone. Welcome to today's pre-market prep for September 21st, 2023. I don't know where September went. It was in, with pockets a little bit heavier, which you gotta love. Let's see here. I don't see anything yet in the chat. Okay, nice. There we go. The chat just loaded. Let me know if you guys can hear me as well. I always want to double check that. But yes, good morning, Vivian, Benjamin. You got to double check. But Alicia, Jatrice, yes, awesome. Love all you guys. Wouldn't rather be anywhere else. Excited to be here on this morning. It's been a great week. It's kind of one of those things where it's okay, nice. Payday Monday. It was okay, cool. Payday Tuesday. There's been a nice stream of plays that aren't just, even hitting the normal 30, 40%. It's 100% plus. Which again, you're grateful for when you get. You don't aim for it greedily, but if it comes, you accept it happily. And that's really been the name of the game. So, we might be in that arena where we're starting to shift gears and we can kind of look to leave runners more often. And, especially if we locked what we've had to do for the past 2 weeks. It's been inside week after inside week, meaning that we're just trading within the previous week's range, which sucks. It's no real fun. And what we talked about all last week was us finally getting to a point where we would be able to get movement, right? Real movement with conviction. That's what we got yesterday, and that's what we got today. And if you've been following us on the pre-market prep session for this past week, you got exactly what I've been talking about, which is that bearish sentiment, with us moving to the downside. That was what the market already was, right? Powell didn't come in and throw any extra juice on the market. The market was already net bearish, right? The market was already net bearish going into Fed minutes. So that's what I try to get everyone to understand, is that it's not really on Powell. We were already bearish. Those 2 weeks that we chopped, what happens was shares were being distributed. They were being sold, right? Sold. And eventually there weren't enough buyers to compensate and we dropped, right? That's literally how the market goes. That's how market movement goes. So we got the movement yesterday and it was quite lucrative, right? But individuals have done very well for us as well. When we talk about, AMD, Amazon, Uber, Airbnb, right? What else? NEM, XLE, right? A number of different individuals and ETFs for XLE have paid for us very nicely over the course of the past few days. So whether it's QQQ, which has done well for us, we've been trading a lot of QQQ, or SPY, there's a lot of opportunity out here. That's just, I guess, the bottom line. So just make sure that you're doing what you need to do in order to execute, right? Closed mouths don't get fed. Part of opening your mouth is opening your mouth. So anyone who has questions, right? If you're struggling with markets and, you haven't been able to get on the same page, ask about it, right? But you never get better doing the same things. So whether that's you getting started with us or you taking a step further with us to solidify your understanding and maximize your execution, do that, right? I never want to sound like I'm nagging anybody, but I also don't ever want people to get complacent. And that's really the whole thing, is that, yes, we've had a great week. Yes, we've had a number of, plays that have been very easy in terms of entrance and exit. Enter when we, fulfill our entrance qualifications, and exit when we hit our price targets. Been super easy. NEM was the biggest layup trade on gold, and I'll probably make a video on that soon. But just a layup trade. We've had a lot of layup trades where it's you get in. If we come back, you got another chance to get in, right? If we retrace breakout area, and then you just sell when we get to our price targets. And it's been nice, right? Very nice. But you want to make sure that you're taking advantage of those opportunities. And if you're not, you're figuring out how you can. So without further ado, let me dive into what we got going on today, and throw a 2 in the chat for everybody if that makes sense. And if you're on that same wave, yes, puts paid yesterday. Yes, they will pay a buttload this morning. No, I'm not sorry for the language. They will pay a buttload this morning. And it's going to be a great day, right? But you always want to look and say, okay, I express gratitude for this. I am happy about this. What can I do better the next time, right? What can I shift? What can I change? How do I want to? Or you could say, hey, I did a great job. I wouldn't change anything. That's important also. But you always want to reflect and say, okay, cool. This was great. But what did I do right? What did I do wrong? What could I have done better? Right. And that's what carries you over into the next time and you getting those future wins. If I just had said, oh, hey, I made some money, I don't really care how it happened, I would never get to where I am now, right? Where I'm able to walk you through one of the craziest days that you have all year, which is a Fed day, right? That doesn't happen by just, oh, happenstance, right? You've got to take in and constantly inventory. Okay, what the heck happened this time? What happened last time? Now I'm aware and I can add that into the foundation. Like yesterday, usually we fade the first move, right? The first move was quite smaller than normal yesterday. Now, usually I'd say, okay, let's edge into puts 2 weeks out because we're at important daily levels right now and we can just average down. But you guys know that when Powell talks, sometimes we can get that pump. And a lot of people get really, really, really scared when we get that pump and then they have to average down. So it's one of those times where you got to make a judgment call. And unfortunately, I thought we'd get more pops so we can even maximize more off the put profits. But that wasn't the case. We got a 2-minute pop, right? So we ended up still bringing home the bag on puts, not as big as it could have been. But I'm gracious and exemplify gratitude for what we brought home. And now it's important, again, to put that into the data box, right, in your head, where you say, okay, next time the Fed minutes come around, I know that sometimes we could only get a 2-minute pop, right? Or the move that we could get, the move we're supposed to fade, can be a small move. Now you know that moving forward, and that is a big win, right? Because that's what carries you in the future when you have the onus, right? And you have the conviction to say, oh, I'm grabbing my shorts here. You get that based off of experience, right? So write it down 100 times, right? Like the teacher used to make you do whatever you need to do in order to remember that, and then you bring that forward into the next experience. So let's dive into what we got going on here today. Our top headline is sit tight. So markets are still digesting the latest messaging from the Federal Reserve, which wrapped up a 2-day policy meeting on Wednesday afternoon. Quote, the fact that we've come this far lets us really proceed carefully, said Chair Jerome Powell, emphasizing some recent battles won on the inflation front, but citing risks related to an overly resilient economy and labor market. Yeah, that's really the big issue, is that in the midst of like this AI race and all this is going on, there's like not as much weakness as we need to see, to be honest, in employment in order to feel good about decreasing rates. So let's see here. On that note, the central bank kept rates unchanged for the second time this year, though investors were watching what might come next in the FOMC's economic projections. What happened yesterday was not a surprise. Them also announcing that they might have to hike again is not a surprise, right? And that's why when everyone says, oh man, Powell's just doing his thing, Powell is not just doing his thing, right? What happened was what was already going to happen based off the charts. And being able to discern that is huge. It was not expected that they were going to hike or that they were going to drop rates. Like it was expected that they were going to leave them unchanged. They've also mentioned before how they might have to hike again. So it's like nothing that they said was groundbreaking. Therefore, it was priced in. Therefore, that was not the independent variable, the driving factor determining yesterday's price action, right? Yesterday's price action was determined by the previous price action that had us in a bearish spot. So the median projection for the federal funds rate at the end of the year was 5.6%, implying one more hike, the same seen in the June projection. Policymakers also increased their forecast for the Fed funds rate at the end of 2024 to 5.1%, compared with the previous 4.6%, while the median projection for the end of 2025 rose to 3.9% from 3.4%. Now, fewer rate cuts were seen in 2024, leading benchmark indices to close the session lower, with the NASDAQ sliding 1.5%. The yield on the 2-year Treasury note, which reflects interest rate expectations, also hit 5.118%, marking the highest level since 2006. Quote, forecasts are highly uncertain. Forecasting is very difficult. Forecasters are a humble lot with much more to be humble about, Powell noted during his press conference. In terms of inflation, you are seeing the last 3 readings are very good readings. It's only 3 readings. We were well aware that we needed to see more than 3 readings. The only concern, and it just means this: if the economy comes in stronger than expected, that just means we'll have to do more in terms of monetary policy to get back to 2%, because we will get back to 2%. So obviously, if you can tell from the context and the way that it's spoken, right, the verbiage, all that, that was Powell. What to watch? So far, the Fed has seemed to add enough pressure on financial conditions with less fallout for growth and employment compared to previous U.S. inflation battles. That has led the market to price in an economic soft landing, which has helped prop up stocks for much of the year, contrary to many of the initial forecasts on Wall Street. The key question is whether that can keep going. Have the 525 basis points in interest rate hikes delivered since March of 2022 already filtered through the economy? Will things hold up if those levels are held through 2024? What about the curveballs like higher energy costs, student loan repayments, and damaging labor strikes or a government shutdown? Those are all other variables that could come in to influence the outcome, right? We've got strikes, possible government shutdown, student loan repayments coming back, higher energy costs with OPEC cutting production. We've got all these different things that are happening at once that could also influence, the economy. So it's not all up to interest rates, and it's not all up to Powell. And I think that they're going to try and be smart about this because they know exactly what I talked about yesterday, right? That idea that if you decrease interest rates, then demand is going to just skyrocket again. It's going to increase inflation again, and then we're going to be right back in this cycle. So they've got to tread lightly. As I've said before, I'd never want to be the president, and I would never want to be Jerome Powell. It's as simple as that. I feel like both of those jobs suck, and it is a lose-lose situation both ways. So in terms of media, Hollywood talks, the Hollywood strike could soon end as writers and major studios met face-to-face on Wednesday and will meet again today with an aim to finalize a deal. Wow. If an agreement is not reached, the strike could extend through the end of the year. Writers have been on strike since May, with actors joining the picket lines in July in a historic double strike, halting production of several TV shows and films. While Netflix may run out of new content later compared to its competitors, the threat is real. Seeking Alpha analyst Luca Sochi. Netflix is one thing we've been trading to the downside, right? That's also been very profitable for us. Investing group leader Stonefox Capital also warned investors that Warner Bros. Discovery may, quote, face a major hit next year without new original content. So WBD, right, might be in trouble. So we'll see what ends up coming of that, right? Strikes rampant. Something else that we talked about over the course of the past few months about how we saw strikes, becoming a thing and how we see more and more of it. And now it seems like every other day there's someone else striking, right? It was UPS and FedEx a bit ago, and then now all their drivers make six figures. And it was the writers and the actors and, all these people going on strike. Now it's the people in Detroit, right, working at Ford and GM, and everybody's striking, right? We're at a pivotal point in the labor market, and it's showing through these actions that we have going on. In terms of consumer news, latest earnings, shares of FedEx rose 5.8% after the close on Wednesday after the company's sales outlook beat estimates. The package shipping firm posted earnings that easily topped expectations as it continued to cut costs and poached customers from rivals UPS and Yellow. However, revenue of $21.7 billion came in just under estimates amid ongoing demand weakness. Quote, labor negotiations at our primary competitor and the bankruptcy of Yellow disrupted the market, said CEO Raj Subramaniam. Adding that FedEx aims to maintain the majority of the business won. Now, FedEx Express continued to weaken, although cost cuts helped push operating profit higher. Now, in terms of COVID news here, free tests, the Biden administration is resuming a program to deliver free COVID-19 tests through the mail, according to Secretary of Health and Human Services Xavier Becerra. The federal program had restarted last December in partnership with the U.S. Postal Service, allowing households to order a total of 4 at-home COVID tests for free. However, plans to preserve the remaining test kits and a decline in hospitalizations prompted officials to pause the program in June. The latest decision to resume the program comes amid a slight uptick in COVID-related hospitalizations. In the U.S., rapid COVID-19 test makers include Abbott and Becton, Dickinson and Quidel Ortho, and Quiagen, whose ticker is QGen. You know how that goes. COVID scares back up. It is what it is. I don't even like mentioning that word on social media because I feel like it just gets flagged and all this other stuff. So y'all know I just call it the virus. In terms of today's markets, everything is red. Shocker. Nope. Right. Puts up. Awesome. We've been in long puts for 2 weeks, right? When you look at Microsoft and all the other ones, right? When you go back to that analysis on the weekly on a number of different tickers last week and the week before, right? We've been in long puts and the short puts we've also been playing, and both of those are up big green today. So looking to take profit, take advantage of that, and pat on the back to us. Right. It's not easy to navigate this market. It's not easy to be ready when moves are made. But I think it's very important to recognize when you're aware of those moves and they come to fruition. Right. This is huge. This is the toughest arena for humans to operate. And we're doing so pretty flawlessly. Right. Which is nice. You're always going to have issues. You're always going to have stuff that goes against you. Not everything is going to work. But overall, when you have the overwhelming majority of things working, it's a beautiful time. It's worth expressing gratitude. Now, in terms of today's economic calendar, we had jobless claims at 8:30. That's important. We also get a couple things at 10 a.m., existing home sales, leading indicators, et cetera, et cetera. Let's see what we got going on here in terms of, where is that? Here, in terms of the data. So let's check out the data. German finance minister, blah, 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 blah. Coinbase shares fall 2.9%. Riot platforms and Marathon Digital down between. Oh, wow. So it looks like crypto shares of cryptocurrency firms down pre-market as Bitcoin falls for second day. Dang. So that might be something worth looking at. Coinbase, Riot, Mara, right? I have not checked out the charts. I'm just saying based off of that fact. Now let's see. Jobless numbers or jobless claims, 1662 versus 1688 previous. Estimated was 1692. So it looks like we had less jobless claims than expected for the continuing jobless claims. And then the initial jobless claims, we had 201K versus 220K previous. Estimated was 225K. So we have less jobless claims across the board than what was expected. That ends up, that doesn't end up being good for markets. You want, I guess, more people unemployed, right? We've talked about that before, but that's the data that we got. Regardless, it's important to note that we are opening up at an important previous support level of 435 on SPY, right? So don't be looking to go crazy with the shorts, because that was yesterday when we dropped 1% and 1.5%. That was overnight when we dropped what looks like maybe another 1%. Right? So make sure that you're not going crazy with the shorts. When if you go out to the daily and you look left, which is what you always need to do in these situations, whenever we have a big move up or a big move down, go out to the daily or go out to the weekly and look left, right? And it's as simple as that. And if you look left, we've bounced there a number of times. So I don't need to be sitting here trying to continue to milk the downside when we've already had the downside move. So in terms of today, right? Take profit on puts. Look to take profit on puts, right? Lock it down, make it real. And then we can get a bounce, right? Is the bounce guaranteed? No, but it could most definitely happen. And you can make short-term bills off the bounce as well. Have that pre-market low marked off. Have pre-market high marked off. And if we get a peak below and fail, it's a great time to grab lotto calls, right? And you can ride them back up, to pre-market high and have these pre-market levels marked off and work from there. But overall, it's been a great week. We've been talking all week about how we were overall bearish and Powell was not going to be the thing to determine it. He was going to be the smoke screen that was going to allow the move that we had, talked about happening to ultimately happen. That happened. The Qs were bearish. SPY was bearish. A lot of big techs are bearish, and we are in longer-term bearish positions on them. That came to fruition, right? So if you tune into the pre-market prep sessions, congratulations. It's free money being dispersed out, right? So being here, oops, there goes my Mio. Being here is part of being, 1% better each and every day. And that's the goal. And you start to see that really, really materialize as long as you show up for yourself. So we got a great day on the horizon. I'm excited for it. Let's go ahead and dive in, right? In the Facebook group for all my people in the trading group. Let's get that done. And other than that, I'm excited to see everybody back here tomorrow morning for the last pre-market prep session of the week. Let's have a good one. Peace.